How's it going, everyone? It is Wednesday, March 13th, 2024, and this is our video for today. So let's get right into it with our longer term market bias over here. Everything is still all systems go on a longer term time frame. Technically and fundamentally, we know our fundamental clouds to potentially watch out for, which is some things happening in China. Um, One thing I wanted to share that I learned today from Pete. Let's go to my market strength. He shared this chart RSP. So let's pull up this RSP chart. And this is an equal weight financial chart. So right now, we all know that the S&P is very concentrated in the Mag 7 stocks and chip stocks. Those have been leading the move up, going parabolic. In from December, so we saw that everything was moving up, right, from October all the way to December. Now, if we overlay the SPY, we can see that it did compress for a bit, and then this was pretty flat while the market was moving up all the way until February. So that tells us that equal weight, what was really moving the market were Mag 7 stocks and chip stocks from January all the way to February, close to the end of March. Since the end of February and going on to March, we've had broader participation in the market. It's starting to trend up. So that means that all things being equal, every sector is going up, not just tech. So if we look at our tech sector here, XLK, you can see that it's been very strong over here in January, kind of strong in February, and been petering out. XSD is not the most liquid thing, but you can see here how it has these rises and these spurts. But we can also take just a quick look at our mega cap tech stocks just to see, how those are going, right? And you can see how Nvidia had this breakthrough in January and had been climbing higher. Same thing with something like SMCI, ASML. Let's look at Broadcom, which we are in half position in ASML, by the way. Broadcom is one. Oh, there's a bit of a deeper retracement there. AMD, even TSM. So we can definitely see, that kind of broader participation. So something I thought that was just very interesting. Now, on the horizon here, a couple of things we're looking out for. We have some retail sales tomorrow, which I think is fairly minor. FOMC next Wednesday, I think, is probably the biggest um, piece of consideration. Now, my personal bias going into this meeting is the following. First, I'm not going to expect any rate cuts in this meeting. The market has also priced that in. Where the market and I are maybe disagreeing is when those rate cuts are going to happen. Right now, the market is pricing around an 80% chance of that happening in July, which I think is reasonable, but we don't know how soon that is going to happen, right? It's really going to depend on the economic data. So, my bias is we could see some rate cuts this year, but again, nothing for Q2. I think it's going to happen in the back half of the year, really starting in the summer. Now, market seems to be aligned on that, but there are still some rate cut chances to be happening later in the week. So, if we get any rate cuts, that will be a good sign for the market, provided that the economic backdrop is still strong. If it's not very strong, then it could be a chance of weak economic growth and a signaling from the Fed that they're cutting rates because they don't want the economy to tank. So we need the strong numbers as the backdrop. So high ISM, low unemployment, inflation is still low, and then we start to slowly peel back the rate cuts rather than aggressively peel back the rate cuts. Okay, shorter term daily context here. Market has been a little more volatile, moving up, deep retracements down, deep retracements up. This is the CPI number. Has some effect in the past, but hasn't broken the trend. It just created some volatility within the trend. Same thing with the FOMC statements recently. I think the market is in alignment on a shorter term basis on the FOMC statements. They haven't been breaking the technical trend We're in the watch out for any sort of major buying climax. So this longer term channel helps us gauge that. So if we break through this channel here to the upside very quickly, in something like 2 or 3 days, we get to like 525, 524, then we can see some aggressive selling because the move got a little bit too ahead of itself. All right, so this is the current action for today. We had a flat open, tested the downside, and we've just been shopping around VWAP over here, finding support on the downside and finding resistance on the upside. So we had a chance and we took some starter longs early in the day when we found some support and we tested for VWAP. This could be a day that had, gone over to the upside if we had a slow kind of grinder day. Instead, it's turning out to be an absolute dud. So we can't really stick with or add to a lot of positions. You can stick with positions that are working, but you have to give it some time and not expect the market to really help or to hinder you. We know that today that tech has been pretty weak, but everything else has been decently strong. So there is a broader participation in the market that we're seeing today. I think if I'm a long-term trader here, zooming back out to the daily, you're looking for some good swings here. And in this day, it's not the best entry. I think a better entry would have been on the 12th, but you take some very, very strong swing longs, which I'm going to give you one in this video, and you can ride them out depending on the strategy. We know that our market bias is long-term is very bullish. So if your outlook is more than just a few days, then you can ride out these trends. Today we have support to me around this 510 level, 511 level, and we have resistance from the previous all-time high at 518.22. Flight to safety is fairly low, but we know that Bitcoin is up. I really should be taking that out, the flight to safety. VIX has also been fairly low. It did breach the high of the day quickly earlier today, and then it came back down. So nothing crazy over here. We just set an alert for the high of the day. That could give us some warning sign that there is a tiny drop. I also have some one VIX call expiring next week to one, capture any drop, and two, to capture any volatility in the FOMC statement. So I need to go back and see if that works, but we do know that on certain drops, VIX does pop up, so it's good to buy it on these floors. I have the 1315 calls expiring next week for maybe 30-cent premium. So as long as it moves, 1380, then I should be able to make back any premium that I lose. But yes, utilities are down. Mega cap tech is fairly weak. Financials are doing pretty well, but tech in general is on the weaker side today. So if I was a day trader, which I am doing some day trades. We had some startup positions early in the day, and I'll give two examples here. So first one was PayPal. We had a nice breakout through the 50 SMA, and we had room until this gap fill. So I took PayPal here, and then I exited close to the gap fill for a nice gain. So I took it at 1045 while the market was starting to get its leg up higher. As the market tested support, I added it quickly, and then I took profits on that position because I knew we were close to support. So this had a really nice breakout. You can see the volume steadily rising here. We moved up higher, but we also know that this D1 resistance can change the intraday trend because there is a new selling being encountered. So nice little move there. MPC is one I took a starter position on today, so I took it on early at the high of the day. It's holding the gains here, so it's kind of dying, but we know that there's a lot of buyers on this move supporting it. So unless it really, really breaks through this level, then we're not going to do anything major, but I'm not expecting anything out of it. I'm not going to be adding to this position because it's unable to clear this key red bar coming here at 1040, and the market's also giving me nothing to work with. So there's no probabilities in my favor, and we can't add to that position. Let's take a look at what we had in the last video. So let's go to our picks. All right, so the pick from the last one was Wells Fargo. And you can see it's doing what it's always doing. If we zoom out Wells Fargo, and just to show the intraday trend a little bit clearer on a 15-minute chart, we'll have an early move, pull back, early move, and pull back. So the trend is continuing. Let's zoom out again to an H1 chart. You can see that a little bit more clearly. Doesn't get too ahead of itself, just steady, steady grinding up. Big move, pull back, big move, pull back, big move, pull back. So Wells Fargo is doing very, very well, doing exactly what we need to. We have some longer term calls. So on the market pullback, when it shows strength, I'm going to be looking to add to that position and ride it up all the way until earnings. The other one I mentioned yesterday was an LIN day trade. Oops, I think it was just LI, sorry, not LIN. Okay, so I want to walk through the good things I did in this day trade and not great things. So LIN, I took it here at 1 o'clock, and you can see what the market was doing. At 1, it was finding some support here. This is a very strong stock, so took a starter position at 1. Once the market broke through the switch to the downside, I added to LIN. Over here, had a bearish engulf, which wasn't the best, but we had a very, very long compression afterwards, and the market was rising higher while the stock was losing its strength. And the long compression told me that this move was likely done. We had a very strong move earlier in the day. The D1 chart also wasn't great, and because it was a Chinese stock, we couldn't have the confidence to hold it overnight. So I'm fine with these ads here. The mistake I made was I should have taken profits on this pop-up over here at 310, or even the scratch here at 315. Instead, I added on this pop and then failed, and I took my loss at the end of the day. So LI was a loser because I made the mistake of doing this last ad when I didn't have the market tailwind in my back to do that last ad. So we're going to mark that as an L, but our Wells Fargo swing is doing pretty well. So what are some of the picks that we can do for today? Two ones that I like. First one is LIN, and you can see here a really nice 45-degree chart, steady price action, moving up higher. To me, the ideal entry was Feb 15th on this breakout over here. Ride the position higher on this bull flag, you add, so you add at 450. Another bull flag, if you really wanted to, you could add again, but you didn't have to. Ride it up higher here, got ahead of itself, pulled back, and then you can add again on this. So I would take, it's some decently liquid options. You could take it if you have the pricing power, the longer term calls until earnings, but I'm just going to take a few shares and look to add slowly over time and scale this into its earnings run. So LIN is the pick for today. And let's take a quick look at our other picks. So first, our MS put credit spread. So it finally broke out of a compression, which was very, very nice. It needs to hold this level here. And we have another 10 days or so until this expires. So it has to hold above this level. I'm not crazy about this. Though there, I just got my bullish reversal alert over here. Market has a lot of tails, so we're having quite a bit of support here. If we poke through, we could get a little bit of some self-stops being triggered. That's what I'm kind of watching out for. Not a bad entry point if you want to take a starter long here, but I'm not crazy about the market right now, so I may end up not taking this. We also know it has a tendency to have these failed breakouts, so I'm not as bullish on MS as I once was, but since we have some time, I'm willing to give it a little bit of wiggle room. We also have our T-Mobile put credit spread, which is expiring this week. So not doing anything, which is totally fine. It just has to hold above the 50 SMA and the AVWAP-E on any market tailwind. So that is looking quite fine. Our Netflix position, nice compression over here. Still technically very, very valid. We just needed to actually get through this little gap over here that's providing some resistance. Once we do that, then we can have a nice leg higher. The longer this compression is, the better we have. We still have about another month out until earnings, and we're in shares, so we don't have to worry about any sort of time premium decay. And then we have our half position in ASML. So it's still holding the line here. You don't have to worry about it getting too ahead of itself as long as this level holds. If this level doesn't hold, then we have to get out of the trade. So a little bit weak here because chip stocks have been pretty weak, but we know that there's support at this level. So a lot of patience here. We're holding a lot of positions that are pulling back a little bit, but still technically very, very valid. So that is the pick for this video, and we will continue it back up in the next video.